Welcome back to the video, everybody. In today's video, I don't have a stock call out. I don't have any market moves or anything like that. If you haven't checked out my last video that I posted Tuesday about Palantir, PLTR, you're definitely gonna want to check that video out because the stock is still, hovering at a decent price. I started my position on Palantir actually yesterday. But today's video, I have stock market hacks to profit more. What do I mean by that? Breaking that down is generally growing your portfolio at a more consistent and faster rate than somebody who wouldn't be using these tools that I use. These are tools that nobody really taught me. I have a couple tools that somebody taught me, but they're more or less just quotes that have helped me kind of keep my mind together when it comes to trading. But number one, the first thing I started doing that really helped me was never selling a full position without reason. What do I mean by that? Say you're down 10-15% on a stock, you just bought it and somebody's telling you to cut your losses at 10 to 15%, but you analyze the company looks really well, they have good plans for the future, and you don't want to sell them. Don't sell them. I never do. I hold my companies until the very end. Companies take time to innovate and come out with new products. You can't simply, buy a stock and expect it to go up a couple months later. It takes time sometimes. That is my first tip, is never selling a position without reason. Without reason meaning if the company comes out with some bad news, they're tanking, they don't have any, good business plans in the future, then obviously you have to cut your losses on that company. But how often does that happen, when you're analyzing a company and actually taking the time to, see what projects they have going on and, looking at their profitability and, things like that, their debt. Stuff like that matters, obviously, and you're going to look at that before you get into a stock. So the amount of reason you have to stay in a stock always is going to outweigh the amount of reason you don't have to stay in a stock. And I can promise you, every time you think you should sell a stock and you sell it for a loss, the stock usually goes up. I don't know what it is, if it's some market juju, but every single time I've done that, the stock has went up. So now I refuse, unless you have to give me the best reason in the world to sell a stock, and I will sell it. Other than that, I'm holding. Even when I'm in big profits, sometimes I will take my profits off the top and still hold something in there because I want to see if the company is still going to run. If I've already made my money off it and it's the market's money sitting in that position, I'm fine with holding it and letting it run, seeing what happens. Number two, this is really important too. Averaging down when you can is extremely important. I always make the mistake of, I can't do this sometimes. I look at a stock, it's $5 in profit, way over my average, my starting position. And I do not want to buy it. I don't want to buy it when it's $5 over. Something in my head tells me, wow, you're overpaying for the stock because you were smart enough to get in at this price point. Sometimes it's okay. I've dabbled, 50 cents to $1 above my position. I've bought some more stock and averaged up a little bit, but I absolutely hate doing that. I don't know why. It's just, if I made the decision to get into a stock at the right price point, I usually getting under it and I wouldn't call it greedy, but getting under that average cost to get the stock at a cheaper price rather than paying more for it, But it is what it is. Sometimes you have to do it, and I understand that, but that's just something that I do. I always like to average down when I can, never average up. So I will hold my funds in my, in buying power until I see an opportunity to average down most of the times. And if the stock runs and I started a small position on it, then so be it, let it run. If you're making money, then you're making money. You can't complain. When it comes to averaging down, I like to start small. Usually, your stock is not going to take off when you buy. Usually the stock's going to, go down a little bit. You're always going to see red before you see green. It's at least within that time before you see your big profits that you're waiting on. You're always going to see red before you see green. There's going to be market reactions, market dips, pullbacks, all the way up to your price point that you think it's going to go to. I start small always. You start in a small position, and yet I've made the mistake too. When I first got into trading, starting big and not having any funds to average down. So my average cost is stuck, and I'm just stuck where I'm at, watching my money, decrease and decrease without, getting them shares at a cheaper price. Number three is going to be one of the most important ones, and this goes a long way. I've learned, this is one of the things that I've learned from another trader that has completely changed my life, and it's basically investing consistently over a long period of time. It's not going to happen overnight. We all have to realize that building wealth takes time. And when you invest consistently every single week, you have a set amount that you want to invest in the market, you do it, and you don't have to buy a stock, but investing that money and putting it away to where you're not spending it and you're just using it to buy an asset is gonna benefit you in the long term. The quote that this trader has told me is probably the best quote that I've ever used when it comes to trading. It's long-term consistency beats short-term insanity. And one of my favorite traders and mentors, Evan Cabral, mentioned that to me probably like a year and a half, 2 years ago, and definitely changed the way I traded, because I was always trying to be that guy to come in there and make that day trade that like hits big. And because that's all you see online, all you see on social media is, hey, I just made this much money. Day trading, hey, I just made this much money on one option. I made 30,000 on one option. It's very easy to get taken away from what trading actually is when you're on social media. These trading groups want you to come in and, pay a little bit of money, and they want you to think that you're going to make, huge profits before you get in there, and you realize it takes time to make big profits. You can have really good weeks, but you can also have really bad weeks. It's just the way it goes. Nothing is guaranteed in these markets, and that's why we need to be extremely careful with our investments. Definitely mindful of what's going on. That's why I say penny stocks, you go lighter on, because you can still make a really good amount of money, depending on your portfolio. Everyone's portfolio is different, obviously, but penny stocks generally, are more volatile, and we'd go lighter on than, a bigger name company, Fortune 500 company, all of that. Number 4, and my final rule to my investing, is the stock market is not a casino. Don't treat it like a casino. If I want to go gamble with my money, I will go gamble at a casino. Meaning this definitely portrays to stock options, because there is definitely good ways to make money on stock options, but also considerably stock options are more of a gamble than buying and holding a stock, which I'm a fan of. I like buying and holding. When it comes to options, I will do an option every once in a while, but it's gonna be every once in a while. It's not gonna be something that I do every week, because I'm just not that good at stock options. I'm good at buying and holding a stock. I've ran into plenty of people who've got way too caught up in options and blew their portfolio. $3,000-$4,000 down the drain off a couple plays, because they couldn't take profits right away, because they wanted to get that just that $10 more or whatever it was. They don't have a game plan in place. That's kind of what options has to, options takes a lot of mindset training. They don't have a game plan in place. They make a trade and they're in profits. They're doing well, but they don't want to sell it yet. Then the trade tanks. Their option's about to expire and they're out of the money, and that was their whole, portfolio they put into one play or something like that. You got to be really careful in the market. You can't put everything in your portfolio on one stock. You have to diversify. You can't have your whole portfolio in oil. You can't have your whole portfolio in tech. You can't have your whole portfolio in pharmaceuticals. I've made the mistake. I've put a lot of money in one stock, and granted, this time it worked out for me, but the whole time I'm holding this stock, I'm like, wow, like I'm looking at my portfolio. My whole portfolio is reacting off just this one stock. There's no type of weight pulling, each another way. If this stock has a bad day, my whole portfolio has a bad day. And that's just not fun that way, because when you have a bunch of different stocks that you invested in, one day you could be making money off one stock, the other day you could be making money off the other stock. If one's down and one's up, it's okay, because you have another one that's still making money. And it distracts you from the ones that are down, because you're looking at, oh, these are good investments happening right now. These ones might take more time. It's okay. It's easier to look at, easier to deal with, and it's a lot smarter of a technique when it comes to building, a financial portfolio over time. Can't stress it enough. Buy different stocks. Don't put all your money in one stock. If you don't have, enough money to make some significant gains on a stock, you have to start small then. You just have to tell yourself, I will get there one day. That's what ties into investing consistently. You keep building your portfolio constantly, putting money in, dividends, and I can't stress dividends enough. They're like the most profitable, way to, stack your bread for, a while. If you have a long-term mindset, a dividend is definitely the way to go. There's plenty of dividends, in the markets that can pay you, a decent amount of money if you invest in them long-term. There's not, a better feeling in the world when you do everything right and it works. So that is gonna wrap up my video on my 4 ways that help me invest in the stock market and be more profitable in the long term. I couldn't think of a better video to make this week. I've been doing a lot of stock call outs, and I was like, I have to mix it up a little bit, put something out there that people can really use towards their whole, lives. I didn't want everybody to just think that all I do is stock call outs and I don't share enough knowledge, because I really wanted this video to be a lot more valuable to everybody. But that's gonna wrap up today's video. I appreciate everybody who's been liking and commenting on my videos. It means a lot. I love responding to comments, getting some new insight on some stuff in the markets. And don't forget, if you haven't signed up for Robinhood yet, I will put a link in the description. Make sure you sign up for Robinhood. You can get us free stock up to $500 if you haven't already. Maybe you have Webull and you want to move over to Robinhood, or Ameritrade and you want to make a second broker, you can always do that. And if you guys want to sign up for Coinbase, there's also a link in the description. If you're interested in trading crypto, I have a couple videos on my channel, and there's plenty of other ones on YouTube. But signing up under my link will get you some free cryptos. But that is going to be it, guys. I really hope you all enjoyed the video on my stock market techniques to help me profit more. And I will see you guys next video.